Welcome everybody to another eye opener. This is Market Wealth Daily's quick little video chats we do with top traders, and I'm super excited to have Keith Harwood here with me again today. Keith, it's a mess out there, my man.
Oh yeah.
I cannot figure this stuff out. If you'd asked me what I thought was going to happen on Friday morning, it did exactly the opposite. And then I got to the end of the day and I accepted what was going on. And then Monday, it like came all back. It gave it all back. And now
Yeah.
this morning, we're back into what I thought was going to happen in the first place. I feel like I'm getting tossed around like a rag doll here, man. This is
No, I hear you.
crazy,
Yeah.
crazy, crazy. And I'm kicking myself. I was looking at USO on Friday and thinking, man, I should take some calls because I know oil is going to go up with all this nonsense going on. And then I backed off Monday morning because, oil was dropping. And I'm like, man, I could have got a real great trade on that. So uh, help me fix my head here. Tell me how to be a smart trader and what real traders do and not wannabes like me.
Yeah, absolutely. Yeah. So, to I mean, I guess touch first on what you had mentioned. Oil prices obviously were one of the most impacted whatever commodities, sectors, et cetera, off of this increasing tension between Israel and Iran. Things are escalating there. And then, of course, we come out and say, well, we expect this to be relatively contained over the weekend, so it comes back off. And then this morning or last night, the expectation was maybe it's escalating again, so oil prices going back up. Frankly, I think that there was an opportunity in the short term off of a technical basis, like right on the evening open on Thursday. It's a futures-based trade to buy into oil, take a quick profit, and walk away from it because right now we're subject to so many fundamental inputs where escalation creates higher oil prices and de-escalations leads to lower oil prices. So we're just subject to that fundamental information. This is like trying to trade based upon a prediction of how the US-China tariffs are going to come out. So, completely different type of war here. We're dealing with actual missiles. But with the tariff war, there was a lot of chop in that trade. One can try to focus on the inputs as they come in, or one can ignore it entirely and work on other sectors. Those are kind of the two methodologies I see here. Trying to trade a stock that might be impacted but may not be. That can be a bit difficult. And frankly, that's part of what we saw with Fifth Third last week. So Fifth Third was the idea that looked really strong from the AI prediction. It was pressing a breakout. It actually started to get hit a little bit after US-China trade tariff news had started to get a little bit more clear, and then it got hit further off of the increased tensions in Iran. A lot of financials actually got hit on Friday. Fifth Third wasn't immune to that. At the end of the day, I look over at the forecast toolbox to just see what to do in Fifth Third Bank. And for me, it basically tells me, well, this trade, oh, it's loading still. So as soon as that loads, we'll pull that up. Gets a little delay here at 9 a.m. But basically, it's starting to show a little bit more of a bearish bias. So at the end of the day, that was not a trade that ended up working out. The AI updated its inputs. I'll come back to that one as soon as it's loading. But, at the end of the day, if this is now changing the input to say, with the price behavior that we've seen over the last 3-4 days, it's no longer looking like a tremendous bullish opportunity, then why would I stay in it? That's basically revenge trading, which I always try to avoid. So I can say, if I'm not long this trade, would I enter it today? Based upon the technicals, maybe I could argue that looks like 37.5 or 38 or maybe down to 37.25 can hold, and it could retest 40. Is a $40 call going to pay me in that scenario? Not really. Above 40, that's when the $40 call starts to work out. So if I don't think or believe in this trade anymore, why would I stay with it? That's basically the net of it. I mean, if I could argue maybe that it looks like it should hold above 37. But when I go to like that forecast toolbox that I mentioned, let me refresh this and see if it's just needing a little. There we go. Now we'll get an update on it.
Click it
Fifth Third
harder,
is
that's all.
showing bearish bias here now, and that 37 may not hold. So all it is a revenge trade. It's a psychological based trade if I stay in Fifth Third Bank. And so, cut the losses for me and move on to the next trade. Similar kind of
You know,
setup,
I
honestly. Oh, go
Let me
ahead.
stop you right there, just because you touched on a unbelievably good tip that I want to highlight. It's like, would I enter that trade today?
Yeah.
I'm in a trade right now that went against me and it went past my mental stop that I have in place. It went against my trading rule and I'm outside of my parameters.
Yeah.
You know, how long have I been talking to people like you? I mean, I talk to you guys all the time, some of the best traders in the world, and I'm still fighting my own emotions on this stuff.
Yeah.
And so that mentality of would I enter that trade today? That's just a great question. It's
Yeah.
a great way to reevaluate that and make a smart call because I'm sucked in. I am doing the thing I know I shouldn't be doing. I should exit it based on the rules, and I broke my rule, and it's going to cost me. Maybe I'll get lucky, but this is not a game of luck. This is a game of strategy. This is repeatable uh, outputs that we're looking for. We want to be able to do this again and again, and luck should not be a part of that equation at all. Anyway,
Yeah.
you just hit a raw nerve with me. I'm mad at myself, and the two sides of my head have been arguing, and you're just feeding that argument, pouring fuel on the fire.
Yeah, exactly. I mean, I think of it in terms of like I actually often a lot of people often compare trading to poker, where it's a lot about strategy and numbers. I actually like comparing it to golf. It's looking at a wide open fairway and saying, "Gosh, if I hit a straight drive here, maybe I can get par or even birdie." And then I hit a bad drive. It's in the middle of the woods. If I were to say I want to like double up on this fifth third bank position, it's like just betting that I'm going to save par from the middle of the woods. It's not a good opportunity. It could happen. And frankly, I shouldn't be betting on it. But the worst thing that happens, honestly, in those sort of scenarios is for it to get the par because then you get convinced that I knew better. I could pull this off. And it was a bad trade with a low expected value at that point, and shouldn't have worked out. It did. I got lucky. And sometimes being lucky is great, but it actually can set up for some bad trading habits in the future. So in
So
this
you mean
case,
I shouldn't smash my when a trade goes against me, I shouldn't smash my club and throw my bag into the water hazard, right? I should
no,
try to
no, yeah, I
chip
would
back to the
say,
fairway.
exactly. I mean, unfortunately, the market doesn't let us have mulligans, right? So we can't say, never mind, I didn't like that one. I'm just going to take it back. We have to live with what we've got. And right now, Fifth Third Bank is like, it's a setup that today, I would not enter it. So if I wouldn't enter it today, why would I hold it? At that
Uh,
point,
yeah,
that's it.
yeah. I
So
think we do get mulligans, just that the golf balls that we use are really expensive. That's all.
yeah. Yeah, I got to use those shiny, whatever, neon colored ones or one you found from the range and say that's a
Yeah,
better ball
right.
to use at times. And honestly,
Yeah,
that's another point with the market. Sometimes you just use smaller capital if things are a little bit more uncertain. Use something that's not, I got a green surrounded by water. I don't necessarily want to pull out the expensive golf ball here. Let's just, even though that's going to make me hit the ball maybe a little bit better, I don't necessarily need to take that extra risk. So good
we
opportunity to
can.
say clean
Yeah,
the slate. It's actually good habit forming to take those losses because I think the biggest thing that traders struggle with is taking losses. And that's what really makes a good trader is knowing when to take a good loss instead of letting a good loss turn into a really bad loss. And a really bad loss is what really ruins the account in the game of golf. It would be ruining the round, trying to squeeze the ball into a small opening. And all of a sudden, what should have been a bogey turns into a quadruple bogey because you just couldn't see through the reality and say, this situation does not set up well for what I'm looking for, and I need to find something better.
I know that's just so true. What a great perspective on this.
Yeah.
And I mean, I'm here obviously to do the interview and to share with everybody, but just helped me quite a bit. Just got my head a
Mhm.
little bit straighter. So I'm
Yeah.
very grateful for that. So, all right. So fifth, third, we looked at it. Would we enter it today? Probably not. Probably going to look for a way out of that one if we haven't
Yeah.
already. And then what? And then now, what do we do next?
Well, so then I go back, kind of the top down. I looked at a lot of different stocks. Well, I always look at a lot of different stocks, but I looked at a bunch of new ones this morning with the updated forecast toolbox, of course, to see where things were uh, projecting in the future. Right now, the S&P 500, it's back in setting up a range, 605 on the high side, where we tested before Israel and Iran got escalation, and really 595 on the downside. It's a real tight range. We get below 595. The main support's really 575. The main resistance is really the highs at 614. So a wide range, but then in the short term, we've got this very tight, choppy range. We may move out of it just off of uncertainty with the Israel and Iran situation. We may not. I struggle to see a major trade in SPY right now or in the broad market. And the part of that's because we do have stocks that are going up and stocks that are going down in the current scenario. You look at like XLE energy stocks, of course, with oil up, they've tended to perform fairly well over the last few days. Stayed pretty consistently stable yesterday, may show some more upside today, but it's very subject to oil prices. And you mentioned USO, so I got to show the chart of it. Although I don't have a view on how to trade USO here particularly, USO really spiked. There's a part of me that says if USO is this high, XLE should be higher. Logically speaking, it makes sense to me that XLE should be higher given where we're at relative to the last 6 months. But the AI models are showing more limited growth potential in most of those oil companies, even with the USO move. And there's that uncertainty that if things do de-escalate and all of a sudden oil prices drop back down 5%, that trade's over and it's subject to a fundamental input. AI models, or at least the one that we're using, is very focused more on technical data, stuff that is observable in the market rather than unknown future events. I mean, we factor in the concept that an earnings announcement is coming up to know that there is new uncertainty coming in and that may shift the projection. But if there is a fundamental input, it can create all sorts of volatility that really can't be charted out. I mean, frankly, if anybody knew what was going to happen with the U.S. and Israel, we wouldn't have been at 75 on Wednesday afternoon in USO. We would have been trading closer to 77, 78, have a more minimal upside move. And there was some concern here. And then, of course, it came to fruition. But the market didn't price it in nearly where probably they should have if they knew the reality of the situation. And then they got a little overzealous with it and pulled it back, and it's all chopped now.
Yeah, you just again reminded me of something that you've talked about a lot, and there's a concept of intermarket analysis and the way the sectors rotate and money moves from one sector to another. I almost feel
Yeah.
like there's intersector analysis that we could do, and you
Hmm.
touched on this many times before. If you look at the different sector ETFs, they're made up of different components. And you can find a leader and a lagger within the sector of the ETF. So, for instance, the relationship between USO and XLE, right? So, if USO is the leader and XLE
Hmm.
is lagging, now you
Yeah.
look at XLE and you say, hey, it's probably going to catch up to USO, and
Yeah.
if we see a pattern of that happening, that then becomes a great way to find a trade. And maybe it's, maybe I missed the boat on the calls for USO, but maybe I can pick up some XLE calls and still
Yeah.
maybe I don't get the pop that I got or that I would have got out of USO, but maybe I still get a lift, a nice little income generating trade, which is what keeps the lights on.
Exactly. And there are opportunities out there, and they're interesting, but they are subject to some risk. So or incremental risk because of fundamental input instead of just pure technical. So it's XLE bullishness to me is built upon a little bit of the technicals because it is starting to run up, and a bit of the correlation and saying it's underperformed the correlation that traditionally happens. If oil prices stay elevated for longer, that has a long-term benefit to XLE. And that's likely what's causing the laggard situation is this expectation that if USO comes right back down, can these companies really monetize a move in oil that only lasts for 24, 48, 72 hours or 2 weeks? Somewhat, but maybe not as much as they would have in other conditions where if we've got, $100 barrel oil for 6 months in a row, these companies can really leverage their positioning and make much more money in oil in most cases. So at the end of the day, the laggard element is somewhat natural. It's just right now that looks like an opportunity, but again, subject to fundamental input. So,
You have this sense
yeah,
that the market's just fragile right now. To
yeah,
your point, there are a lot of fundamental inputs going on. You still have tariff questions. You have the issue in the Middle East, and you have all these other things that are moving this thing. proceed with caution, I guess, is the most important thing for everybody to understand.
Absolutely.
For relatively predictable moves, but at the same time, know that the ability to predict this market behavior is a lot smaller than it typically is, and adjust accordingly. So position
Exactly.
size and all that, right?
Exactly. So yeah, I mean, given all of that, I basically went through a bunch of scans and I looked at stocks like Valero, which is in the energy sector, and Marathon in the energy sector, because they're showing some positive elements from the AI generated signals. But I don't want to be in that right now. I'm trying to find something that's got a little bit less exposure to it. And actually, one name that popped up after I ran through a bunch of different charts that I think is interesting because it shouldn't have much of a correlation is Starbucks. Starbucks has started to show some bullish behavior. It tested out the 100 and 200-day moving average, faded a little bit, but is holding really close to that level. Now, when I look at this on a pure general technical level, I'd say, well, if we get back above that 200-day moving average, that's the entry point for me that looks a lot more bullish. But we're close. Now, when I look at the forecast toolbox, which generates some signals based upon expected movement and prices in if it expects us to get through those levels, I'm showing a fairly positive model grade. So our model grade here tells us how reliable the model is. If it gives me a B or an A, that generally means that it's had a long probability of, or a long history of success with this particular model in this kind of setup. And it shows this great bullish potential here. So today we may see a bit of a range starting near the close of the previous day around $93. That should be about the low for the day. With this nice growth potential that's pretty consistent over the next few days. If I go out a week from today, the 24th, we're looking for prices to be around $100 a share. Now, $100 a share is a pretty nice target anyway, because a lot of times we see stocks do pause at big round numbers. It's built on a couple of dynamics. Number one, people tend to trade around that $100 level, that $200 level. They say, oh, if it gets to $100 a share, I'd like to sell some stock. So you tend to build up a lot of volume around big round numbers. We also have a lot of open interest in the options traditionally around those big round numbers. People start trading the 100, 120 call spread, or the just buying $100 calls or selling $100 calls. So you get a lot of volume around those big even numbers. We've seen it a lot in a lot of the big companies, Apple, when it's trading near, say 200. 200 tends to be a magnet for Apple. 100 may be a magnet for Starbucks, but it may also push right through based upon the model. Over the longer haul, there may be further upside. But if I just want to play out for that 6% rally to $100 a share, I can really get some great potential return there from that options market. And when I look at the July $95 calls, they're currently about $2.50. We go to 100, they're worth at least five, because they'll be $5 in the money in that scenario. Now, if we undershoot it and only go to 97, woe is me, I still do pretty well. Right? And actually, Starbucks is down a little bit this morning. That's not necessarily a bad thing for my setup, because I'm basing this on what the AI is predicting. The market is down a little bit this morning. So I may be able to get an even better entry point here on a minor dip, allow the other chop in the market to go through. And then when people start to allocate to individual names that they believe shouldn't have been impacted by the Israel-Iran situation, or shouldn't be as impacted by US-China tariffs negotiations, then perhaps Starbucks can be one of those stocks, and the way that it's behaving makes it look like it is. Because again, we had a nice rally in Starbucks last week that started to come back around as, come back off a little bit, seemingly off of market correlations as opposed to independent fundamental, company fundamentals and company technicals. So I actually really like Starbucks here. I think those $95 calls for $2.50 present a great opportunity. Even if all we can do is go back to the 200-day moving average, it's a winning trade. If we push through and go to $100 a share, that big magnet level, now I've got a home run and a really great potential setup here, given all the other market inputs. I believe in that scenario, I'm generally avoiding some of the conflicts. I'm basically still going to have a little bit of exposure to the market correlations with the potential for chop, but on its own, this is less impacted by a lot of the other stuff going on in the background, all that noise, as we say, for this particular stock.
I think you overlooked one of the most important reasons that these big round numbers are big magnets that draw people.
Mhm.
For me, it's because I don't like to do the math. So I'm
Yeah.
really simple. I'm a Neanderthal. I just need easy math. 100 is a very easy number to do math on. So
Yep.
let's just call it what it is. All right. So, it's for and you had a B grade on there. I'm a strong B performer. So if I see a B, I'm excited about it.
Yeah.
I'll take it every day of the week.
Well,
Um,
and one of the things you noted here is actually kind of interesting with Starbucks, the July options. 100 is the biggest strike, but there was a big trade on the $110 calls yesterday. So somebody's betting on a different round-ish number. One of the more interesting things that I do tend to see that I find really interesting, and you don't see it in Starbucks here, but if you get a big open interest on a weekly option with like a $97 call, it tells me somebody is doing something real funky, and I actually want to look at it a little bit more. When all the open interest is built off of that big, even round strike, it tends to be pretty traditional, pretty predictable. Sometimes you get some weird numbers off of big technical levels or an earnings announcement where people are trying to predict the move size. But yeah, broadly
Nazi
speaking,
stuff.
100
Yeah,
should be a big target level. 110, every $5 tends to build some open interest here, frankly. But at the end of the day, I think that this has got some interesting potential upside, less impacted by what's going on in Israel and Iran. Great model grade. Um, and I should note here, I've got a webinar coming up, Wednesday after the close, and I'm going to talk through more of the forecast toolbox and ways to implement trades utilizing the forecast toolbox. Because sometimes we've got these trades, and I tend to highlight the ones that look like they have a high probability of moving. But there are oftentimes trades that are setting up more for range-bounded trades. So, if I look at SPY and say I've got a B model grade with very little movement, there are actually ways in the options market to create and generate a nice return in that scenario that may suit the style of people's trades differently than looking for these big potential movers.
absolutely, man. I'll tell you, again, you end up talking about the same themes when a market gets in a like a certain kind of climate. But we've seen so many climates over the last few months that you really got to have a solid toolbox to you know use the term again to look at what type of trade to use to keep pulling that income out, right? And so
Hmm.
there's some really basic spread trades that you can use for these flat markets, that kind of stuff. I know at the event, the webinar is going to be amazing just to get a sense of this toolbox and how it actually performs. And we keep going to it, and you kind of glance over it really quick in these because these are quick chats. We don't have the time to really dive super deep into it. But in those webinars, you get into why this works, what is behind it, the logic behind it, kind of what it's spotting across the board, and a little bit
Hmm.
more time to explain uh, things. So it's not like we're saying, oh, hey, do this call option spread here or whatever. It's all right. This is what the call option spread is. You can spell it out for somebody, give them a little more
Yeah.
instruction. I'm sure there's a bunch of guys on here right now that are like, oh, yeah, I got that. I know what a call option spread is. Some people might be looking into it and trying to get more information. So to have that deeper dive is really
Yeah.
valuable. So I do, yeah. And by the way, folks, you guys listening and watching this, if you have questions, drop them in the chat. As always, I let me make sure I actually have it on. That would help probably, right? Uh yeah, so drop a question in the chat. Love seeing everybody there. And
Yeah.
we don't, Keith and I will talk all day long and we'll, banter back and forth, but we want to make sure we're covering what's important to you. So if you're ever in any of these sessions, we want to hear from you. We want to, hear what questions you have. We enjoy doing this stuff, but it only matters if it makes sense and it's valuable to the people listening, watching these sessions. Um,
Absolutely.
yeah, well, Keith, the webinar you said is tomorrow, right?
Yeah, tomorrow, Wednesday, the 18th,
Yep.
4:30 Eastern time, and we're going to talk through some of that stuff. And like I mentioned, just to stick with that analogy, these moves like Starbucks, this is the driver in the golf bag. Some of those other trades that are more range bound, that's the putter. And for those of you that golf, you know that the putter is where you really can save a lot of strokes, and it's something that you have to use on basically every hole. The driver is going to be an opportunistic thing, and it can really feel good. But some of these other trades here, it's getting into the short game, and those are some really exciting opportunities as a result, because that can really help accelerate some trading and compound returns.
Definitely. Well, I'm going to put links to all this stuff, put the access to the webinar coming up in the email. So keep an eye out, guys, when you see that replay come out, and it'll be out pretty soon as I can get everything edited and dialed up. And then also information about the toolbox and all this stuff, because we cover a lot of ground in these really quick. And for me, I know I need to be able to kind of go back and review it. So all
Mhm.
that stuff will be in there, and we'll make sure that you guys have access to it. Keith, coming up on the open here, I know that you
Absolutely.
are a busy man and a lot of people count on you. Thanks, Carlo. Great to
Thank you,
see you in
Thomas.
there again, buddy. Yeah, it's great having you here, Keith. Thank you so much for the time. We'll let you get in there and get trading and make some money.
Absolutely. Thanks again, everybody.